Hello, everyone. Listen, I saw a video today on Facebook and I wanted to address that video. So I'm going to go through it. I'm going to have you watch the video and then we're going to address it because I feel there's so many misinformation out here. So I want to help you understand, even though the video was good based on the guy's knowledge, but I know there's so many Americans, so many people that feel the same way. So we're going to watch the video together. So bear with me. Let me share my screen so we could go in there and watch this video. All right, so you can see it.
Hey, look, I don't care if you're banking with Bank of America, Wells Fargo, or Chase. It doesn't matter because at the end of the day, all banks do the same thing. In fact, I had my mortgage through Chase here, and that's why it's important to read the fine print because you got to look at how much money actually goes to interest and actually crunch the numbers. That's a 4.625% rate. Me and my wife, we got my home just about 2 years ago, and that's where the rates were at that time. So if you look at that, over $2,000 goes to interest. Now, here's why today I'm switching to a 15-year rate without using a bank. So if you look here at this chart, a 15-year rate will always have a lower rate than the 30-year rate. In fact, this chart is a little bit older, so the rates are even lower than what you see here. And you'll end up saving a ton in interest. In fact, you'll actually pay about a third or so of what the interest is on a 30-year. So there's 157,000, and over here you'd only pay 60,000. So where you can get the lowest
So just to kind of interrupt that, of course, you're going to pay lower interest, right? But you also make a lot more payment because your monthly payment is going to go up because you're paying in a shorter time. So I want to address that, and I'm going to address that in the next video when I share. But let's keep watching, and we're going to talk about that and show you how so many people are so focused on the wrong things, which is the interest rate. And I'll prove that to you in a minute. So let's keep going.
15-year mortgage, and that's what I want to share with you guys, is through the official Lower My Bills website. And they don't go off of a bank or anything like that. They actually have the lowest 15-year programs. So basically all you do is you're going to go through the form, and let's go ahead and fill it out. Alrighty, and there is the results there. It takes about 60 seconds to calculate. They have the lowest 15-year program. So in my case, with the rate that they gave me, I'll only be paying with interest $681,000 on my home versus what I would be paying before, over $1 million on my home. That saves me $340,000 plus.
So the key, he says he saved $340,000, right? True. I agree with you on all that. And I say, yes, you do save that much. But here's the problem I see. All right, the 340 that you actually saved, where's that money? You saved it, but where is it? Do you have it? See, that's the thing that a lot of us don't really think about. Do you have the 340? Yeah, you didn't give it to the bank, but do you have it? Unfortunately, no, you did not. You know why you don't have it? Because you give it to the bank up front when you were making your monthly payment. So we won't go into my software in a few, and I'll prove to you the biggest mistake that the mistake that he made. But we won't share that with you and then show you how, as an individual, what you should do for yourself and for your family, and how you can make sure that your monthly payment is what you can comfortably afford to put out every month, and then save the difference. But we'll address that. I'll get to that. So let's keep going. Let's keep looking at this.
Just on interest. Okay, so that's huge. And that's why I'm saying, don't use a bank because the fees are higher. You can just go through this app and get your new payment. And it just takes about 60 seconds or so to calculate. And they have the lowest 15-year programs. In most cases, you can keep your same monthly payment or really close on a 15-year term through the Lower My Bills.
So the first thing we're going to do, okay, and I'm going to kind of cheat on here because I already have the numbers. So let me just pull it up on my pictures real quick because I kind of took a screenshot of it earlier. So he's mortgage is $552,416. So we're gonna put that right in here, 416. All right, he has a 30-year loan. So that's what he has, 30 years. We'll go all the way right there, 30. All right, so 30-year loan, and his monthly interest, his interest is 4.62. Okay, that's the 30-year loan. So when we look at that, so his monthly payment is $2,839. All right, so give and take $2,830. That's the monthly. That's just the interest and the principal payment. So yes, he's going to give the bank $469,000 in interest paid out over 30 years. All right, so we got that. Cool. All right, now we're going to do a 15-year loan. All right, so we got this. So we're going to do a 15-year loan. So I'm going to bring this down to 15 years. Now we're going to change the interest rate. So he has the interest rate for 15-year loan 2.90. Okay, for 15 years. So the new monthly payment is $3,788 versus $2,839, which was what it was earlier. So now when you do that, yes, you interest paid will be $129,491. So again, that's the interest he's going to pay out. So yeah, so we get that. All right, now here's what I'm going to do. Okay, so here's what happens. Now we want to take the difference between the 15-year and the 30-year, right? In this case, the difference is $949. So when you subtract the monthly payment of $3,078 minus the $2,800, it gives you $949. So what I'm going to do is I'm going to go to my compounding interest. I'm going to remove this interest rate this amount to 0. I'm going to do a 4% interest. And why am I using 4? Because with cash value life insurance, you can get 4%. With some of the accounts that we use, there's at least that's a very, very comfortable amount. Now I'm going to put that $949 here. All right, $949. I'm going to put that in there. Okay, now, so $949, and I'm going to run this. I just want to make sure this doesn't change. So we're going to keep this to, what was that interest rate for the old loan was 4.62. All right. So that was actually, sorry, not 4.62, 2.9, right? But what I'm doing though is this, because this is what we're doing, 4.26. So if we kept the interest rate the same for the next 30 years, and which gives us the monthly payment. So for 30 years, so is the amount 4.26, 2721. All right, so now we took the difference, we'll put in here. Now here's the deal, folks. Look at that. In the same 30-year period, this client or this guy, if he had took the difference in his money and he put it away, he would have earned interest of $317,000. Now you can see that money, right? You could actually see it. It's not something that is off in the air. I didn't give it to the bank. I kept it for myself. I didn't pay it up front. I kept it. I saved the difference in the money and was able to put that away and walked away with $317,000 interest earned. The balance, the total amount that I still have control is $658,000. Now, once we do, what if in 15 years, how much would I have in 15 years? The key is control. In 15 years, I would also have saved interest of $62,720. That's money that I could feel, I could touch, I could use to do other things. And my final balance, that means my $949 monthly contribution plus the interest, everything added together comes out to $233,000 in 15 years. I'm in control. I'm winning. If I run the other situation, so when we go back and we look at his situation, 2.90, right? Interest. So he's paying more. He saved $129,000 interest, but he lost $62,720 in interest and lost $233,000 because this 949 is added here to this 373,788. That's his new mortgage payment for 15 years. He took his hard-earned dollars, his 949, and gave it to the bank. And that's his 3,788, which is, I took the 949 and I invested it and used my money twice. Not only do I have cash value life insurance on my to save the money, I also have a death benefit to protect in case you die before the house is paid off. What happens if he drops dead in before 15 years? His wife is stuck to paying his mortgage of $3,078. Where's she gonna get the money to do it? Where will she find that money to do $3,078 if he doesn't have insurance or any of those things? I'm just using that. Okay, so before you jump to start using programs like this, guess what? You need to think about the opportunity cost of your money. How much am I actually losing? So folks, I just wanted to do that. Let me hear your comment on it and see what your takes is on it, on what I just shared. Again, numbers don't lie, you know, numbers always tell the truth. So that's why I put it out here in black and white so you could see it. So if we run the same 15 years, look at what happens. But if he did that, because putting the money here, he wouldn't have the 949 to invest. So I'm just showing you how he lost that. And if we drag the money all the way to the longest term, he'll make more money. All right. Thank you, folks. Thank you for tuning in. I appreciate you so much. Again, just doing a quick video to help you understand. Bye-bye.